Hi everyone, and welcome to our webinar on Decoding FTP 2023 and recent amendments in customs law. This FTP did not see as many changes as were expected. One of the reasons that was given in the post-FTP speech was that many of the changes were brought in the original FTP by way of amendments. This is, I'll say, has a positive as well as a negative side. The positive side being that there were discussions of discontinuation of some major schemes like EPCG, which did not happen. So that is an important point. In addition to that, Amnesty scheme was introduced. Several simplifications in procedure was there, which are always helpful to the trader industry. The negative side is that for quite some time now, it seems that the government has put the exporters on its own. So starting from a time wherein various incentives were granted or procedure relaxations were there, this now has a time wherein the government has clarified that this would be a remission-based FTP and there will be no incentives that would be granted. And incentives logically not being granted because they are not in line with the WCO policy which applies to India as well. But there could have been further simplifications for exporters, further pain points being addressed at a substantive level. Even now, the service exporters do face an issue of tax cost burden being borne by them on several inputs, or let us say, in some other manner, the accumulation of credit being said. So there were multiple issues which would have been addressed but were not. So in this session, we will discuss the key features of the FTP, what was the focus of the government in this FTP, the analysis of FTP and the handbook of procedures. So some of the substantive points we will discuss. Then the amnesty scheme, which has years of all the importers, exporters who have some licenses pending, that we will discuss. Changes in customs law, the MOOWR scheme as well as the electronic cash ledger that has come, we'll briefly touch upon that. And in the end, we'll have a live Q&A. So let's start with the key features. So if you see in this FTP, the focus point was one, the policy continuity. So now this earlier, if you see the FTP was for a limited period. So last FTP 15-20, before that 9-14. So there was an end period which was attached to that. But now this FTP 2023, it would be a continuous FTP, and on a responsive basis, whenever the government feels the need, they can amend this FTP. So that is one striking feature which has been different from the earliest FTP. Then one of the identifiers were export initiative at district levels. So local goes global or identification of district hubs, etc. All these initiatives were taken by the government in this FTP. They wanted to promote high technology exports, by promotion of high technology exports. So there have been changes in the FTP wherein even for, I'll say, technology which was restricted till now, they have allowed that you import only for the purpose of export. So those changes are there. There's a definite focus on e-commerce. So e-commerce gaining prominence. They're allowing that even for smaller exports, you will be able to export and then claim benefits. And then infrastructure upgradation for promoting that export. So at district levels, etc., when we'll be seeing the benefits, we'll see that there is a focus that along with this FTP, there will be an infrastructure upgradation which would help the exporters. And in fact, if we see the speech also, they focus that along with this FTP, the national logistic policy would have a role to play in order to increase the imports. Lastly is collaborative partnership with the state governments. So this is also something which the government would focus so that to develop those district hubs and promote exports there. Moving further for analysis of FTP and handbook of procedures, covering the major points, not the procedural ones. So firstly, the validity of advance authorization has been increased to 24 months. In this we'll cover the changes of advance authorization. This one is important. The inter-unit transfer of duty-free material shall be allowed, provided ITC is not availed on such material. Now, while this provision has been there since FTP long back, since FTP 2004 to 9 also, but the difference is that number one, earlier under advance authorization, not many importers used to pay CVD and SAD and then avail ITC of that. Secondly, there's a policy circular also which says that this is only till the time actual user condition exists. Once that actual condition user condition is not there, then they don't want to limit any transfer or don't want to limit this provision. Recently, Mumbai High Court also, in a case wherein that this inter-unit transfer was there, they said that if you're transferring within the unit, the actual user condition does not get violated and there is no restriction in the FTP. However, with this change being there, in FTP 2015-20, they said provided semi-trade was not there. So not many exporters took this seriously. But now when they have limited to GST with ITC, this provision needs to be have a closer look that they would apply to importers in this case, specifically when they have given an option to import the goods on payment of IGST. Then moving on to the self-ratification scheme. So self-ratification scheme is applicable wherein either in SCON your inputs is not mentioned or it is mentioned and you need additional inputs. So this provision was already there, but they have clarified that additional inputs would mean not an additional quantity of the same input which has been mentioned in SCON. But if let us say there are two inputs mentioned in the SCON X and Y, then additional input would mean that you require, because of your manufacturing process, an additional input of Z. So this is what they have clarified under self-ratification scheme. Additional inputs would be there. And under the scheme, self-ratification scheme, they permit that basis the chartered accountant engineer, you can proceed with that. Of course, there are other checks and balances, but then you can go under the self-ratification scheme. Another change vis-a-vis advance authorization would be now the authorization itself would specify the validity period of import as well as for export obligation in which time it needs to be completed. So that is also the welcome move that the authorization itself would clearly depict these timelines and would be readily available to them. Moving forward to the EPCG scheme, as I mentioned, it is a welcome move that EPCG scheme was not done away with. And why these questions of, or why this news of EPCG scheme might not continue were coming is that in the SCM order, which there was a WCO order, it was held that even EPCG is not in line with the SCM proceedings or regulations which have been issued. So there were doubt whether they would continue. However, there are 2 points here which I like to highlight. Number one, India has challenged against that WCO order. So till the time that challenge is decided, all India is allowed to continue with all the existing provisions. So number one, this scheme can very well continue till the time a negative order is there. Point number two is, if you understand that order, the order was mainly that India as a country cannot provide incentives because because incentives are not permissible. However, any duty remission is permissible. And that is why you saw that instead of MEIS, RoadTep came, and that was to recoup whatever existing duties these exporters face in actual. And if you see the EPCG scheme also, that is specifically a scheme for exporters, that if you're exporting, you get duty-free capital goods. And to that extent, the scheme also does not only fall outside the purview of SCM regulations. However, yes, we need to see whether these regulations, with what the appeal, what the final decision comes. Coming back to the changes which have been there in the EPCG scheme, number one, I feel it's more of a clarificatory, but they have said that this Roadstell and RoadTep scheme which have been there, if you're exporting under that, the EPCG benefit would be available simultaneously. So that was practically also being done, but I think it's more of a clarificatory nature. The validity period of EPCG authorization has been increased to 24 months. And lastly, for this battery EV and clean products, the EO obligation has been reduced. So earlier also government has been doing this, that for priority sector, for priority areas, they have a reduced EO obligation. Now they have extended it to these two schemes also. Moving forward, there are two emissions also from EPCG scheme. One is for the project imports. So now the project imports will no longer be eligible for EPCG. You basically cannot have two benefits simultaneously. So of course, you can go only for EPCG or only for project imports, but this simultaneous benefit they have done away. And second, the post-export EPCG credit steps, which was very useful if you were not very sure of how much exports you would have. So this was a useful scheme for the exporters in these uncertain times, but now they have done away with. You initially only have to decide whether you want to import under EPCG or not. Some additional changes in EPCG. So, as I was mentioning, for certain sectors, or in certain cases, the EO was reduced. Now they have said that you can only get benefit of one in reduction of EO. So let us say for domestic procurement, the EO was 25%. Similarly, for fast track exporters, if you're exporting if you're fulfilling your export obligation within 4 years, that was again another provision which reduced it further by 25%. So a company, if you see, they can follow both the methods. Firstly, they can reduce it to 75% because of domestic procurement. Then if they are fulfilling in 4 years, they can again reduce it by 25%. And similarly, for green technology products and for specified regions, these points were there. So now they have said only one benefit during. So you can get your EO reduced by either of this only once. Some other changes in FTP which have come vis-a-vis the legal framework and trade facilitation. They have moved a lot on online method and on trusting the taxpayers. So the self-certification and automatic approval process would be there in certificate of origin. The online utility of issuance, renewal, and amendment of RCMC or registration certificate has been permitted. There will be automatic online approvals, and the day of various approvals will also be reduced. So you'll see faster approvals or faster grant of these authorization licenses, requests, etc. For export houses, they have significantly reduced some of the benefits. So earlier it was 2,000 crore, now it has reduced to 800 crores for the 5-star rating also. However, the benefit of ACP would not be available to these export houses. So that was an accredited program wherein there was a trust-based thing or a reduced risk assessment. That benefit would not be available to export houses, but the other benefits which were there, those would continue to be available, like reduction of bank guarantee, etc. Now they have identified 4 new TE town of export excellence, and which would be there in order to promote export of certain goods from certain areas. So this is very similar to identification of certain districts. So in this, they have identified 4 new towns. Moving further, some other provisions. So they have mentioned that IC is mandatory for export of service on the date of rendering service. So there was a decision of High Court wherein they said that earlier that you should have IC on date of claiming the benefit and not on date of rendering the services. Now they have mentioned no, IC should be there for services on date of export or rendering service and not on date of applying the benefit. But very candidly, there is no specific benefit which has now been there for export of services. So this provision would have only limited effect. Secondly, they have said that merchant trade would be allowed for all items except for sites and SCOMET items. Earlier, like for prohibited items, they were not permitted that you could do merchant trading, which is moving the goods from outside India to outside India. And now they have permitted it. And for even for SCOMET or sites, they are proposing that in future they would permit. Lastly, the rupee realization has also been considered for FTP benefits. So earlier also again in the original FTP, they have brought in these provisions to say that through Vostro account, if you are realizing rupees, they would be eligible for these FTP benefits. And now they have brought it in this policy as well. Another important change is that in Chapter 7, they have very clearly identified that if, let us say, you are opting for duty drawback. So deemed export, what happens is if you are supplying to an advance authorization or to an EPCG holder, your supplies qualify as deemed export. Now, or there are certain other lists also. So I'll fix the simplest two. So now as a supplier, I have an option to either import my raw material duty free. That option is there. Or they've given an option that I can claim duty drawback. This duty drawback, earlier there was a confusion that I can claim only on branded. Now in this FTP, they have amply clarified that this option of this claiming AIR would also be would be there. In earlier policy also it was given, but there was some confusion in the industry whether AIR would be given or not. Now they have a specific para for this. Moving on to developing district as export hubs. They have brought up with this initiative of district as export hub initiative. Again, it was already there in some documents as part of an annexure, but now they have brought it in FTP, and the benefits would include product or sector specific training, development the need of the local industries. Let us say there's some specific for an industry, for dyeing industry, there's need of specific chemicals. So that would be facilitated whether the availability is there or not. And lastly, and most importantly, there will be dissemination of information. So government would also promote to some extent that this is something, this town is identified as an export hub, so that exporters can come and specifically, they would know that there would be many options available, and effectively the chances of getting an order to India would increase. So this concept has come. In other changes for e-commerce export, this is something, a new chapter which has come, wherein they have said that the benefits would be extended to e-commerce exports, and there were confusions being there. So because for e-commerce export, for courier exports, the shipping bill was not being generated or linked to EDI portals, so the benefits were not there. So they have now said the benefits would be extended. Similarly, the payment problems are also there. So sometimes for e-commerce, you get payment through PayPal, etc. So the payment does not get routed through EDPMS, etc. So I think these all issues would be sorted. There will be designated export hubs with warehousing facility, wherein there will be packing, labeling, testing facilities would also be provided. And the value of courier exports has been increased to 10 lakh rupees per consignment. For SCOMET procedures also, again, this policy was always there in different parts of FTP or in a separate enactment. Now what they've done is they have brought it entire thing in FTP. What SCOMET is it's a policy for dual use items, which basically have a military use also. So they say that because they can be used in both the ways and they can have military applications, the import or export of these items is done in a very restrictive manner, and the provisions are very stringent. So now they have said that licensing procedure, they will be streamlining and the policy would be consolidated. So these were the major changes of FTP and HAND. Now moving on to the next part of the amnesty scheme, which has come, which again is a very interesting part for importers and exporters who have some licenses pending. So the key features of the amnesty scheme is it's one-time option for default of export obligation for advance authorization and EPCG holders. It is applicable for these two schemes. You get an exemption of whatever EO you have fulfilled, and for the balance you need to pay. So this I'll say concept was there earlier also. Even without the amnesty, you used to pay for the unfulfilled EO only. Now the next 2 points are very important. Number one, they are capping the interest amount to 100% of the PCD cost, and they are saying that the interest would not be payable on CBD and SAT. In the next slide, we'll see with an example whether this actually has a benefit or not. But these 2 points do have a benefit for the exporters. So there'll be some saving which would be there. The scheme is valid till September 30th, 2023. So there's a registration process which needs to be done till June. And then you need to apply till September 30th. And cases under investigation for fraud, diversion, etc. are ineligible. So you cannot claim this benefit if that is the case. One more relevant point in this is that interest would not, when they say interest would not be payable on CBD and SAT, they also bring a condition to it that you cannot get the refund of CBD, SAT, you cannot claim credit, you cannot claim refund of this. Why they have said it is, recently what was happening for any CBD or SAT paid, they were allowing under transition provisions of GST. So before GST, if you were eligible to claim credit of this, you could have claimed refund of CBD at SAT under section 142 subsection 3. So even I'll say before coming of this scheme, if anyone has paid CBD SAT and he has done away with his export obligation, this point would be relevant that now they can claim a refund because they cannot go into this amnesty scheme right now. However, so coming to an example of how this provision amnesty scheme would cover, because they have not said that anyone who has a pending export obligation can get covered. They've said if you are under FTP 2009 and 14 for advance authorization and for EPCG. So licensing period or export obligation period, the licensing period would be between August 2009 till March 2014, because this is when the policy was in force. So for this, they have said that and the EO period I've computed basis you can say 36 months when it was for starting in advance authorization, and 18 months thereafter for advance authorization, and 6 years in EPCG. So for 9 to 14, whatever the export obligation period was, so even if let us say it was as late as 2020, you have this option to go under this amnesty scheme. It's an open-ended scheme for the person who got his license under FTP 2009 to 14. Sorry. But for FTP 2004 to 9, it's not an open option. If so, considering the licensing period, they have said that export obligation period, if it falls after 13th August 2013, only then you can get this bill. And why I've put this advance authorization period in red is, if you see the license period would have been somewhere in this period under the scheme FTP 2004 to 9. So the export obligation period would already have elapsed. So for advance authorization, I don't foresee whether there would be some pending. There were conditions that for projects, for the duration of project, that advance authorization would have continued. So some advanced licenses in those category would have fallen into that EO period. But I'm saying for normal cases, wherein the period was somewhere around 24 months for export. So consider the gap is quite apparent, even with the last period or the after the ending of the scheme. EPCG, yes, because the period was higher, period was 8 years. So there's a chance that a significant EPCGs issued in this period would fall under the export obligation period of 30th August 2013. But for advance authorization, this scheme might not be useful. Why I have basically drawn this chart is that one needs to see whether the basis the export obligation period or the scheme under which this license was issued, whether he's even eligible for this amnesty scheme, and not jumping the gun. There's a possibility that you fall under the earlier scheme and earlier scheme or the ineligible period, and therefore you're not eligible for this benefit. And why this date 13th August 2013 is there? The reason is that before that, or on the same date, the earlier also the government had issued an amnesty scheme. So in 2013, government had issued a scheme. So now for 4 to 9, they have said that till when I issued the scheme, post that only I should give an amnesty. So that is the thought of the government. Moving forward to the example which we are discussing for this. So let us say an authorization was issued and import was done in March 2014. And we have taken an assessable value of 10 crores, the basic customs duty of 10%, CVD of 12.5%, and SAD of 4%. So in this case, if you see the basic customs duty, the interest amount is more than the BCD amount. And the reason is that even considering the interest rate of 15%, 9 years have elapsed from the date of import. And therefore, it would always be higher than the basic customs duty, the basic quantum. Similar is the case of CBD and SAT. So if you go under the amnesty scheme, there would be savings in interest quantum to some extent of BCD. There would be savings in the whole of interest of CBD. There will be a saving of whole of interest of SAT. So in that context, if you see the scheme is a no-brainer, you should go for the scheme if there is a pending case. Here, I'll just like to highlight one thing and one recent litigation which gets very relevant here. What the government has done is they have done away or they have waived the interest on CBD and SAT. However, in the recent High Court ruling of Mahindra and Mahindra, they said that interest provisions do not exist for CBD and SAT. So if the interest provisions do not exist, whether that is even payable, the answer is of course no. So if that be the case, a taxpayer can apply the ruling, can say interest of CBD and SAT was also not payable. My only benefit in this example is up to the tune of 35 lakh. And therefore, I'm better off claiming refund of CBD and SAT rather than waiving of that 35 lakh. So I'll just repeat. In this amnesty scheme, what the government has done is they have waived the interest of CBD and SAT. However, basis the recent High Court ruling of Bombay High Court, that interest was never payable. So taxpayers do need to get their strategy right, whether they need to litigate the interest of CBD and SAT, pay it and claim refund, or whether they need to follow a peaceful path and they want to get it done under the amnesty scheme. But if the Bombay High Court ruling applies, then you are better off not claiming for the amnesty scheme, but getting the refund of CBD and SAT in this case. Moving forward to the last part of the presentation, which is changes under the customs law. In this, the first change is under the MOOWR, and this change came through the Finance Act. The Finance Bill, as introduced, did not have this change. However, the Act brought this change. I'll quickly cover this because I hope all of you might be aware of this change. What they have done is when the goods are coming from port to bonded warehouse, and the bonded warehouse also, which has a permission under Section 65 for manufacturing or other operations. Therein, before what used to happen was the goods used to come. There was a permission under Section 65. There was a duty deferment of both BCD and IGST, and duty was payable only on clearance. When the finished goods or the processed goods got cleared, there was a duty payable. If you used to export, there was no implication. Now they have said that there will be no inbound bill of entry. You need to pay IGST or cess. Only the BCD part would be exempt. They may give exemption of this amendment to certain categories, but I don't foresee whether many exemptions would be granted. And amendment would be applicable from date of notification, and it would not apply to already warehouse goods. So what they have basically done is, and what we foresee the implications of this amendment would be, that they have said that for importers under MOOWR scheme, we will not be giving you an additional benefit of GST. You pay GST. If credit is available, you avail that credit. You want to export, you export it on payment of GST and then claim refund. But we will not grant you an outright exemption. Because let us say some exempted goods manufacturers were there, they could have benefit specifically for capital goods on this. So that benefit they have taken away. However, what this would do is this would significantly increase the working capital, because now you'll have an accumulation of ITC specifically on capital goods. The exporters would need to file refund of GST post-export of goods. For exempted goods, the IGST benefit is gone. Now you'll have to see whether the BCD on imported goods makes sense or not. So that for exempted goods, at least this, as if the scheme was a boon, and now this has come into doubt. Lastly, because the scheme is advance authorization and EPCG continue, and these schemes allow you the benefit of BCD and IGST both. Exporter needs to analyze whether he should go under MOOWR or he should continue with advance authorization EPCG and get benefit of that IGST exemption. Lastly, from 1st April, the benefit, these rules, regulations have come into force. So this electronic cash ledger regulations, they were notified last year, and all deposits are exempted till March 31st, 2023. Now they have started the implementation in the phased manner. So for the first one, what they have said is there'll be only a few exemptions, and these exemptions are like courier imports, or let us say wherein the electronic mode is not there and you are proceeding through challan on the bank counter. So for them, exemptions are being granted for 1 month, and after that they'll bring it full-fledged in this phased manner. Recently, there was even a news article that imports are getting stuck in the port because these regulations are not working properly. But hopefully, I think this should be an IT glitch which should be getting sorted soon. So just like GST, customs would also have an electronic cash ledger wherein you can keep money in the ledger and you need not deposit each challan for each bill of entry, and therefore the money can get debited from that ledger. So thank you so much, everyone. Thank you for your time. Thank you for joining in such fashion.